G'day folks, welcome back to another update. Today we're looking at high-grade copper and the US crude oil charts. Now there's been a bearish turn in both of these. We'll see how they're going in, we'll also dig into the details. Before we go any further, make sure you hit that like and subscribe button to support the channel. First, in terms of the outlook for crude oil, oil prices have been volatile with Brent crude futures dropping to $80 per barrel following President Donald Trump's plans to boost US oil and gas production and defer new tariffs. The US Energy Information Administration forecasts Brent crude prices to average $74 per barrel in 2025, declining to $66 per barrel in 2026, due to anticipated oversupply as global production growth exceeds demand. In terms of high-grade copper, BHP increased copper production by 10% in the 6 months ending December 31st, 2024, driven by a 22% rise at its Escondida operations in Chile, aligning with industry's response to growing demand from sectors like electric vehicles and renewable energy. Despite this, the global copper market presents a complex outlook for 2025, with stable price in the US, a mild recovery in China, and weak conditions in Europe. First, we look at high-grade copper. Now, we look at the monthly, the weekly, and the daily. And you can see here the monthly is broken below the moving averages of the CCI 150, although it's turning up due to that bullish candle for this month so far in January. But on the price chart, it's still above the moving averages or broken outside of that moving average range. So slight bullish movement, although it's somewhat bearish on the CCI, so just cautiously neutral at the moment. On the weekly, it's broken above both the price and the CCI moving averages, so giving us a bullish signal at the moment. You can see there longer term it's pretty much going sideways, but a small break above those moving averages indicates a bullish move. On the daily, we did have a break above the moving averages back here beginning of January, and since then it's actually pulled back and retreated into this moving average range on the CCI, which is a neutral positioning at the moment. The price is pulled back also towards the moving averages of the price chart, so giving us a somewhat weakening signal. Now if we go to the intraday chart, and I've got the 1 hour here for reference, so you can use 2 hours or 4 hours, you apply the same principles. We go in the direction of the daily in this case, so it's neutral, so we don't go long or short. But having a look at this, we always look at the intraday chart as well if you're trading on the smaller time frames. You can see here we did have this very longer term going back to the start of January again, a very longer term bearish divergence, pretty much a double top on the CCI versus higher highs on the price, and that pulled back to this minimum range, and it's currently in that minimum range at the moment. And the way we measure that is we look at the Fibonacci. We take it back to the previous low before that divergence started, and the minimum retrace is the 23.38% level. You can see there it's currently hovering in that range, and it could obviously break outside of that or fall further. At the moment, the CCI is showing us a bearish signal. Likewise, the price is below the moving averages, so we may see possibly further downside in the near term. So looking at US crude on the monthly, it's actually a fresh breakout above that moving average range, giving us a slight bullish signal. The price is still in that moving average range. That wick broke above, but it's actually the body of the candle is pulled back into that moving average range, giving us a neutral signal. So very cautiously neutral to bullish at the moment on the monthly. On the weekly, it's been bullish now for a number of weeks, since around the 23rd of December last year, and it's actually a slight pullback this week so far. On the daily, again, it's been a nice big bull run for a few days at least, or a few weeks, and currently similar to the high-grade copper, it's actually hit this resistance at 79.60, and it's pulling back towards the moving averages on the price. It's already hit the moving average range in that CCI 150 range, so again, neutral positioning on US crude. Now if we go to the intraday charts, we've had another bearish divergence here, lower highs on the CCI versus higher highs on the price, and that's actually hit our minimum retrace, Fibonacci retrace level. So if we drew a Fibonacci down to that level, which is a significant low before that divergence started, you can see there it's hit that 23.38% retrace level, and it's currently in that range. Now if we pull that back to that more significant low there, you can see there the price has also hit that below that 23%, currently hovering just below that 23 and 31% Fibonacci retrace. So again, similar to high-grade copper, we may see it bounce out of that. There's a slight bullish move at the moment on the CCI 150. The price hasn't broken above yet, but to go long, I'd like to see the price on the daily break to the outside of that moving average range, the price is already there, and I'd like to see the 1 hour turn up as well, similar to what it did back here with the CCI and the price broken above the moving averages with the moving average range widening. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.